Good morning, everybody. Great to see so many of you here. Thanks so much for attending. Just as everybody comes to their seats, this next session is all about the next steps to net zero for financial institutions. So my name is Sarah Kemmett. I lead for the Secretariat of the Net Zero Banking Alliance, and I'm with the UN Environment Programme Finance Initiative, and it's great to see so many of our members here today. So over the last couple of years, we've really seen a rapid journey in the net zero field, and before we had some of these key initiatives that I'm going to talk about, it was really a bit of a wild west in the net zero landscape with, many companies making, stating net zero pledges or ambitions, but everybody doing it in a really different way with totally different interpretations as to what net zero meant. And so I just want to introduce really what GFANZ is, because I know that it can be incredibly confusing in this landscape with everybody refers to it as the alphabet soup. So GFANZ is the Glasgow Finance Alliance for Net Zero, and it was launched in April 2021 at the Biden Summit, the Biden Climate Summit. And it was launched then because it was, in plenty of time for COP at Glasgow. And GFANZ is a kind of alliance of alliances, and what it aims is for the whole of the financial system to be fit for purpose, to support the transition to a net zero economy, and for climate really to be taken into account in every financial decision that's made. And within GFANZ, there are a whole sort of family of alliances, and we've got the Net Zero Banking Alliance, which we'll be talking about today, the Net Zero Insurance Alliance, and alliances for other categories of financial institutions. And we're really thrilled as UNEP FI to convene the insurance and the banking alliances. So, like I say, over the last couple of years, there's been a lot of work in the net zero arena that's really sort of pushed the debate forward. And here we have three fantastic panelists to tell us a little bit about their journey and what the next steps are there for them. So we have John Stackhouse, who is the Senior VP within their Office for the CEO at RBC. We've got Sherry Wilbanks, who is Head of GRM, P&C, Climate and Sustainability at AXA. And just to mention that AXA is the chair of the Net Zero Insurance Alliance. And we also have Joy Williams with us, who is the Executive Director for Financial Institution Transition Planning at GFANZ. So John, let me start with you. We've got 8 Canadian banks and credit unions in the Net Zero Banking Alliance. So could you just tell us a bit about what the Canadian banks are up to on their net zero journey and what your priorities are for this year?
Yeah, thanks, Sarah, and thank you for all the leadership you've been showing with GFANZ and our journey. It's quite remarkable that we've come this far in just 2 years. I'm not sure many people would have bet that we'd be here today where we are. We're not far enough. We've got a long ways to go, but I suspect when we pause and reflect, we're farther along in just 24 months than many very sophisticated people thought we are. So where are we at today? As members of the Net Zero Banking Alliance, so that's part of GFANZ, and I should stress at RBC we're a universal bank, so we have an asset management division which is separate from the bank. We have an insurance operation, so we could be a member of many entities within GFANZ. We are a member of the Banking Alliance, the Net Zero Banking Alliance. As part of, because that's the biggest part of our business. Generally, the banks, I think we're all kind of moving apace here. We've all set interim targets, declared the 3 sectors that we're going to focus on with interim targets. Maybe no surprise that we've all have oil and gas, because that for financed emissions is the bulk of bulk of our book. Power and utilities would be the second. And then the third choice, it varies by institution. So some are interested in buildings, some in agriculture, I believe one is, and then mobility, so cars particularly. So that shows a bit of the range of the economy, but also the concentration of work, particularly in two areas. Having made those strategic commitments and worked with NZBA on that, we just don't unilaterally say we're going to do this and that. We discuss it with the Alliance. There are a good number of people working day and night on the heavy lifting of this, on developing the methodologies of this, of sourcing data. I suspect we'll talk about the data challenge, and critically, talking with our clients about this. And if there's one point I can stress today, this is about our client relationship. And it's been really interesting to see the opportunities continue to grow as, you know, there isn't a secret team back at headquarters saying, you know, we're going to do this or that. There are people across the economy, across the country, out there now talking to clients in the real economy about their climate strategies and their transition strategies, and then talking about data and methodologies. How do we map that? How do we map that together? We're not going to kind of give you a blueprint or a set of data. We need to work with you on this. So it is a shared journey. That requires a lot of training as well, and that may seem kind of mundane, but it's been interesting over the last 3 days here, the number of times I've heard human capital referenced as a key pinch point in all sorts of transition conversations, and we're feeling that in the work we're doing here. So getting the right people on board, certainly experts are important, but helping our relationship managers, our bankers, understand this, and ensuring that our clients are also investing in that capital and seeing the incentive, the human capital that is, seeing the incentive for that, so that we can sit down with, it can be an oil company, it can be a car company, it can be a farm organization, which we're dealing with increasingly, and saying, let's talk about your transition strategy. Let's talk about how we map this, how we measure it, and how we do this constructively, and move apace here, because we all know we can't take as much time as we might think is required. We've got to move faster. So just a few thoughts on where we're at today.
And could you just talk a little about your motivation for joining an alliance like the Net Zero Banking Alliance? I mean, what's in it for RBC? You know, you're a massive bank. What was your thinking there?
It's a great question. It seems like ages ago that we were involved in those discussions. So we launched what we thought was a really ambitious climate strategy in 2019, and then sort of quickly realized, and this is just the way the world is today, that by 2020, boy, it wasn't enough. Our shareholders were demanding more from us, and our clients, especially our more ambitious clients, were kind of moving further ahead, and we thought, wow, giddy up, we got to continue to revise this. That's a forever challenge, and so we went back at it, and among the comments we were hearing from stakeholders was, you know, what gets measured gets managed. So how do we better measure our progress, but map the progress of our clients? This coincided with the race, or the road to Glasgow, that became a race. And it's interesting in hindsight to reflect on the force function of a summit like a Glasgow. There was just a lot of energy, a lot of, including the President of the United States, leaning into this. And that forced us to move faster than we might have done without that force function. But also talk to our global peers and say, where are you going with this? Because it's better if we're all, or a critical mass of us, are part of it. So among the reservations back in 2021 included that, okay, this was largely a European initiative. This was coming out of Europe. North American capital markets are fairly different from European capital markets. The economy is different. And a number of banks were saying, well, you know, that may work for Europe, but that's not really how North America or maybe Asia functions. But we felt, well, let's get at the table. If we're at the table, we can help make this more global. So it's not just the Glasgow Alliance, it's the global alliance. And that was really important. We secondly felt as Canadian banks that we actually can have some influence with US banks, which probably had more reservations at the time. Many of us have very significant capital markets operations in the US, but we also have kind of similar strategies to our US competitors, and we're able to talk to them about how do we kind of join this and have some impact that we wouldn't have if we're outside the tent. And then just lastly, Sarah, the fact that this has UN oversight was, raised some questions probably among some of the hardcore bankers, what's the UN doing in this space, but became really important for us because this is not something we can do unilaterally or on our own. It needs some sort of oversight. And the UN, that's what the UN does, right? It brings global standards and global governance to that. That was important to us because transparency and credibility at the end of the day are sort of enormous assets, and the way GFANZ was going, but the credibility that the UN brought, not just with perception, with the intelligence, knowledge, best practices that UNEP FI has developed over the years. We saw, wow, that's really powerful. We'd like to be part of that.
That's brilliant to hear from our perspective, especially. Sherry, we heard in the previous session about the kind of one of the unique things about the insurance industry is that it's, almost an industry of two halves. You've got the asset side of the balance sheet and the liability side of the balance sheet, which is, a unique characteristic to think about in terms of the climate impact and risks. And so, I just wondered if you could comment on why has it taken such a long time for the whole idea of insured emissions to come about? So we've, for quite a long time, people have talked about the owned emissions or managed emissions and financed emissions, facilitated emissions. So it's quite recent that this idea of insured emissions has come about. Could you talk a little bit about that journey?
Yeah, absolutely. So the Net Zero Insurance Alliance actually came together and formed itself with its commitment statement in 2021, but we didn't release the target setting protocol until January of this year, which is actually remarkable timing to get something out so quickly. But that journey to actually get to the point of having that first initial commitments in 2021 involved, really bringing the insurance industry together to understand what is the role of insurance? And part of that was taking a look at that client relationship, as John was mentioning. So what is the client relationship that insurers have with their insured clients? And it is different from the investment and banking position. So there was a detailed understanding of what that is, and it's reflected in the measurement standard that was ultimately developed in coordination with PCAF, in that we talk about it in terms of insurance-associated emissions. So it's not owned or financed emissions, it's not even insured emissions, it's really what are the emissions that we think is representative of the relationship that we have with our clients in order to associate their emissions to us on the liability side of the balance sheet. So part of that journey was really getting a detailed understanding of how did we feel the client relationship is. And I think, another part of it was just really recognizing that we do have a highly varied insurance industry and reinsurance industry. If you think about all the different clients that are served, from large corporates and commercial clients all the way down to an individual and your SME and middle market in between, the breadth and depth and the variety of insurance and reinsurance companies reflects the variety that you see in the real economy. And so to really kind of come together and say, okay, we can come together as one and form this sort of alliance was challenging because we wanted to sort of be able to represent all the different facets and variations of insurers and reinsurers out there. But I will say this, insurance may have been a little bit late to the table, but we certainly came ready to dance because, we did get the measurement standard out relatively quickly, as well as the target setting protocol.
That has happened incredibly quickly, so much credit to everybody involved there. Which parts of the insurance industry have you sort of started to focus on from the outset? I mean, like you said, it's very varied. You've got life, you've got health, general insurance, within which you've got dozens of types, travel, motor, home. It's so diverse. How did you kind of think about where on earth to start?
Yeah, so I the reflection was, and which lines of business do we feel we have the client relationships and the impact would be most meaningful initially. And it turns out, we focused initially on the property and casualty lines of business first, most of the commercial lines, and then in terms of personal lines, the retail motor was the initial focus. So life and health is part of the future, and others, forms of insurance like reinsurance and retrocessions and all of that is also, out to the future as well. But I think that we heard a bit earlier from the Commissioner from Maryland, which was very helpful, around insurance has always been part of the conversations where climate and these weather-related perils are concerned. And certainly on the property casualty side, we're part of those conversations. And I just want to kind of broaden the view as we think about the role of insurance in this, and that not just being one that's there to pay the claims after an event. If you think about the activity of insurers and understanding risk, providing risk solutions, both in terms of risk transfer, but also risk mitigation. So we put climate in with that category of it's part of our role to help our clients understand the risks from the climate transition that's happening around them and prepare themselves, their business models and their risk solutions for that. So we think it's a natural fit.
So Joy, GFANZ as a kind of, an overarching bringing together of all of these alliances has done so much in 2022 in terms of creating frameworks and driving the conversation forwards. What's the focus now for 2023?
Well, the first focus is to take a holiday because 2022 was so hard. We put out 600 pages of reports for which we profusely apologize, and we're not putting out any more in 2023. But it goes to the conversation, you're welcome. It goes to the conversation that GFANZ is really practitioner-based. Like we talked about that it's an umbrella organization over multiple types of financial institutions. So we had to produce guidance that was really pan-sector. And the reason that we had to do that was because as this moves forward, I think every single one of the Net Zero Alliances, they recognize that we're not going to solve it by ourselves, right? Like not even the finance sector by itself is going to solve this. It requires regulator and standard setter participant, but there was no one single reference for them to point to say this is what net zero transition looks like in finance. So GFANZ produced this document which both could be used as that single reference, but would also provide helpful guidance, hopefully from a top-down perspective to different financial institutions. And 2023 is where we go out and road test it. Like, we really need people to pick it up, look at it, pick it apart. It was developed by, I would say we had about 20 to 50 financial institutions like actually fingers into the document, and then I received over 900 comments on it, but really it needs to be used. So in 2023, I'm really looking forward to more conversations like this and for people to pick it up, road test it, tell us what works, what doesn't work, and then also trying to, as I think everyone's alluded to, trying to get the whole economy on board, regulators, real economy, because the finance sector is just not going to do this by itself.
Yeah, well, I mean, and you were absolutely instrumental in driving that process, that development of that framework. Was there anything in there that, in the process, or that you went through that kind of surprised you, or anything that you ended up having to leave out because you just weren't able to include it?
Yeah, actually, the biggest surprise was when we came to the table with the participants, we really didn't know where everyone was coming to the table at. I mean, everyone's a sort of a different part of the journey in the net zero transition, but almost uniformly, everyone said this has to be about real economy emission reductions. It was not about what happened on the balance sheet. It was not about the portfolio emission footprint. So it's not a greenwashing thing. They really wanted to make sure that everything was fit for purpose so that they could actually see emission reductions in the real economy. So that was a bit of a surprise that it was unanimous across the board. And then that really set the tone for everything. But unfortunately, we did have to leave out two big things. One was nature and biodiversity, and the other was just transition. So we do have nods to them in the framework, and others have done a lot of great work on both of those, and I expect that there'll be more work on both of those topics in the next couple of years.
Yeah, yeah. And I think within the Net Zero Banking Alliance, we're certainly in the process of kind of digesting it and thinking about whether there are any elements within there that we need to do more work on specific to banking. And I'm sure that's the case with all the different financial sectors. So, yeah, John, you know, it's been mentioned a couple of times now that this isn't up to the financial services sector to do alone. You know, it's not all in the gift of a bank or an insurer to kind of, you know, achieve this decarbonisation that we're all targeting. So what is it that you need to see in terms of policy developments, whether those are financial policies, regulatory policies, or whether that's kind of real economy policies that are going to really help you to meet the targets that you've set?
No, it's absolutely both financial and financial regulatory policy and real economy policy. So maybe I can touch briefly on both. One of the benefits of this whole process is the not just the measurement, but the explanatory element of it. And Mark Carney has been stressing this more eloquently than I will. But the banking sector is very much a barometer of the economy. And our disclosures will start to help all of society, including policymakers, understand both the progress that's being made in many of these critical sectors that I identified, but also the insights that we're able to bring as to what may be holding back sectors from the progress that they should be making, helping policymakers understand what needs to happen to accelerate progress. So as we get deeper into this, the reporting function of this, the math of it, is really critical. But we have to be careful that that does not overshadow the explanatory and the contextual analysis that we will bring to it, because that will help inform, both of them will help inform those broader policies. So what do we need to see on the policy front? Well, in terms of financial regulations, enhanced coordination of what we're trying to do. You've heard some of these conversations over the last couple of days, including with the Superintendent, Peter Rutledge, yesterday. And we're trying to, we've got a really good working group through the CBA, the Canadian Bankers Association, that brings the banks together to be able to talk about methodologies, about standards, and ensure that those align with our national regulations. And a really important part of the NZBA agreement is that national regulations, sovereignty prevails. We are not trying to put our financial sector under the governance of the United Nations or some extra-national body. Canadian regulations are sovereign and supreme, but we need to ensure that those align reasonably well with the international standards that we're adhering to, and that's step by step, but that's working forward. But we need to continue to work with OSFI, with securities regulators, with the Bank of Canada, to ensure that we're not getting out of step in anything that each of those is doing, or that we're doing in the sector. On the economic policy side, it's very important to reflect on the single most important event in climate action that many of us have seen in years, which was the Inflation Reduction Act. And the clear message to the world that has been heard loud and clear, that carrots are more effective than sticks. This is human psychology 101. You need both. And it's important to have an important balance, but we need to ensure that those incentives, so that's part of policy, are out there driving, incenting, and accelerating the change that we want to reflect in the targets that we're setting. But we also need to ensure, and this is going to be a really important part of the reporting process for us, to help policymakers and sector actors understand what policies are accelerating change, and maybe what policies or lack of policies are inhibiting change. And if I can make a last point on that, it would be on the question of abatement technologies, which is going to be an important part of the disclosure process. So let's always remind ourselves that there's an N in the acronym, and that's for NET. And many sectors are investing, and we need to be very rigorous about this and scientific in our approach. But abatement technologies are going to be critical for the next number of years, and measuring the efficacy of those abatement technologies towards that net is going to be a really important public dialogue that our reporting will we hope, help inform, but it is going to be a public dialogue that we'll need to continue to have in forums like this.
Add something to that? I would add one other thing. I agree with everything you said, John, but the one other thing I would add in terms of policy is that the disclosure will also be accountability mechanisms. Because at COP26, I saw, and at COP27, there's definitely a lack of trust between the different stakeholders in the climate conversation, and I think transparency, which will come through policy, standardized across the industry, will be a really key part of that accountability mechanism.
Absolutely. Sherry, if we can just come back to the work that the Alliance, the Insurance Alliance has been doing. We talked earlier about that you've worked with PCAF on an attribution methodology. You've also got a target setting protocol that's been developed. What were some of the real sort of challenges there for you, and how did you overcome them?
Yeah, so I think some of the challenges I mentioned was really being able to understand the relationship between insurers and reinsurers with the clients, and being able to come up with methodologies or frameworks that would work for the different types of insurance companies and insurers. You know, we've got within the Alliance small regional players like ICA Lion out of Kenya, who has a very, big sort of retail book in terms of what they support. We have Credit Agricole out of France, who supports primarily in the agriculture industry. And then we've got the large conglomerates that do everything from soup to nuts, all different types of insurance products and solutions. So there really was no one size fits all. So in terms of the target setting protocol, if you look at it, you will see that it has a lot of optionality to it. And that optionality has received some criticism, which is fine, we don't mind that, but we felt that it was really important to have that optionality because the types of insurers and reinsurers within the Alliance are so varied that we needed a protocol that would allow them to be as ambitious as they would like to be. So we didn't have anything there that would hold them back, but would also be relevant to their business operations. If we were too prescriptive or too narrowly focused, then we might not have something that would be workable for a few of our members. So that was part of it, is really coming up with something that we believe we could stand behind as being credible, but would also really meet the needs of the different Alliance members.
I think that's a really key observation, is that I've certainly felt that we've been on a real tightrope, trying to walk a line between credibility and a degree of prescription, but also a degree of flexibility that permits it to be very clear that it's for the financial institutions themselves to be making their own commercial decisions, which is really important, and to cater to the incredibly varied different business models that the institutions have within these networks. But it is a real inherent tension. And Joy, maybe I can come to you in the framework that you've been developing. One of the kind of elements of the framework has been to kind of provide 4 kind of buckets for either financing or clients. You could put the clients into these buckets of, those that are providing climate solutions, those that are aligning, those that are aligned already, and those who have assets that just aren't really possible to transition and need to be responsibly retired. So, I mean, that's a very kind of useful conceptual framework, but how do you envisage, that being implemented?
Yeah, no, great question, because we get this all the time. The driving force, as I mentioned, was all the practitioners wanted this to be about real economy emission reductions. So we started to ask then as a finance sector, as a financial institution, what is it that we do as a sector, which is we move money, we look at risk. That is what we're meant to do. So we then express that in those 4 key financing strategies. But we also had to walk that line about not everyone is going to do all of these things. So we couldn't be that prescriptive. Some financial institutions will look at how to support companies who are attempting to transition, which might be where the risk factor comes in. Some financial institutions will be looking to provide financing to things that will probably need to be shut down, and that financing needs to take that into account, and that's where sometimes the just transition comes into play. So we put them out and we kind of loosely define them to cover the things that we thought needed to happen to bring the net zero transition around. And this is something that all of these concepts are out there in the industry. You can find examples for all of them, but they're not codified. So this is where we're starting to have those conversations with financial institutions about what do you mean by climate solutions? Does that include, nature-based solutions? Does it include credits? Does it include short-term, long-term technology? Managed phase-out? What does that include? Does it include a coal plant that you're going to shut down like 10 years before it normally would have? And then what is the accountability around that? So it is an ongoing discussion how these things fit in with your portfolio footprints, but it's such an important part because this is what finance is actually meant to do.
Yeah. Maybe I can ask the same question both to John and Sherry about, it's a really, really ambitious goal that you guys have set yourself in signing up to these initiatives. What are the things that really worry you about the commitments that you've made, and how, what is it that the alliances that you're a member of, or GFANZ as the kind of umbrella alliance, can do to kind of help you with those concerns?
I think sort of building off of what was said is that we oftentimes the conversation around the Net Zero Insurance Alliance is truncated to saying net zero underwriting. And that has an implication that we're trying to underwrite to a net zero underwriting portfolio. And I like to stretch the terminology a bit and say net zero transition underwriting. And it really is about support of the transition and supporting our clients as they go through the transition. So I think what worries me a little bit in the short term and the near term, until it's better understood that that is the intent behind the alliance and the members of the alliance, is that there's the perception that we are going to be loosening our support or eliminating the support that we have to the clients out there, and certainly that's not the intent at all. So I think that that's kind of a short-term one of it. Longer term is around, I think, some of the data challenges, which John alluded to earlier, and really what's relevant, what is being asked for in terms of data. We always talk about the issues around the scope 1, 2, and 3 emissions, ad nauseum, so I don't need to rely on that. But I think for us, which as insurers, what we find helpful from a data perspective is more around the transition plans and activities of our clients, because that's where we'll be advising them on the risk. So if we understand their transition plans, we can look through those, we can have conversations with our clients about the risks that we see coming in their transition plans and the appropriate solutions that we can bring to the table for them. And they're also forward-looking versus the historical emissions are backwards-looking, and so not always relevant. So I think that those would be my main remarks.
Well, data, number one. We all know that data is loose and it's evolving, especially in areas like Scope 3. The risk that leads to is what some people would call false precision. So we set down targets, they seem very precise and mathematical, and there will be variances because the underlying data is going to evolve. So are we all okay with that, knowing that 3 and 5 years from now, we'll be saying, sorry, the numbers changed a bit, but the direction is what's most important. Not having wild variances, but there will be variances, and what's most important is the direction. Secondly, methodologies. The methodologies are nascent. They are being developed. This is a bit of a build as you go. And that was part of the kind of thinking going into this. We had a lot of people in many organizations saying the data and the methodologies are not there. Let's get that right before we make this commitment. and we finally resolved that time is not on our side. If we believe in the deadline of 2030 and deadlines of 2030 and 2050, we have to build as we go here. So that's going to require a certain amount of collective accommodation, that things won't be so precise as we go. But what's most important is the direction and speed. Next concern is client buy-in out there in the real economy. How do we ensure that actors, owners, investors, managers in all of the organizations that make this economy and to a degree society function the way it does, see this as an opportunity and not some heavy requirement? I'm dealing a lot with the building sector right now, and they're trying to do some really exciting things. We're trying to help them with that. But it's really interesting to see how they move more quickly when they see this as an opportunity rather than something to hand off to the legal or the risk team to manage. So that I want to ensure that the conversation is as engaging as it can be for real economy actors, and that they eventually see this as a competitive advantage, which actually many of our clients are now coming to us saying, actually, we'd like to speed this up because this is giving us an advantage in all sorts of ways in our market. Last concern is policy certainty. You've heard that a lot over the last few days, but when you think of something as straightforward as an EV mandate, which we're moving towards in this country. So we'll get there, that's established. What if, for some reason, that was changed or even torn up in a few years? How do we manage that? How do we accommodate for that in our own commitments? So that's something we're thinking ahead to. Do we just sort of write an explanatory note saying, sorry, government tore up the mandate? That's probably not a very constructive approach to it. So that's something we'll all we'll need to continue to talk about, because that's a kind of a new frontier challenge for us, but something that hopefully groups like this can kind of keep us all moving forward rather than backward together.
Just quickly, I fully support the words that John had to say around recognizing that we don't have all the answers and the perfect solutions today, and being able to move forward. I think that was also a key conversation that we had within the Net Zero Insurance Alliance, to not let this sort of inability to be 100% certain around the data or the measurement methodology to hold us back, and to be comfortable with the fact that things will evolve over time. We heard around road testing and the GFANS work this year. I mean, I think that's how we should look at it, and be comfortable with the fact that for the NZIA, the target setting protocol may evolve over time as we road test it. Even our PCAF methodology may evolve over time as it gets further road tested. But if we're moving in the right direction, then that should be enough to let us have comfort with that. So thank you for mentioning it.
Yeah, it's a cliche, but it's so true that we mustn't let the perfect be the enemy of the good. I know everybody says that, but yeah, it's so crucial because of the immediacy of action that's required. We can't wait till we have everything perfect. And I just want to delve into another challenge I think that we're all facing, is that, with these very carbon intensive industries, it's not like we can just turn the taps off now. That's the whole point about the notion of a transition. But one of the criticisms that we see a lot of all of these net zero initiatives is that, is the credibility around the transition. What is credible transition finance? And of course, so many people are saying, well, it's an excuse for just BAU, for carrying on business as usual. So, how can we kind of this year focus on gaining some credibility in that space? I think all of you have got something to comment on that.
Okay, I'll start. So absolutely, as I mentioned, in the COP process, the climate change international negotiations, trust has been a huge issue. So credibility is absolutely essential to establish, especially for the finance sector. And I think it's not enough anymore to just make a commitment or to just publish a footprint. That's sort of like, table stakes. Where GFANS has sort of decided to go with the credibility and to support the credibility efforts is that once you put out your commitment or your target, then you have to explain how you plan to get there. That's a whole institution strategy. It's not limited to one portfolio or one product or one service or one set of clients. It really is your whole institution is going to get behind this. And that does require time to put in place, and we don't have any time. So I think what I would like to see in this next year is make it the year of the transition plan, and actually start putting these plans together where it's not just, okay, I'm going to start with this portfolio and this team. It's how do I tie this into business strategy for my organization? And I think that starts to get at the credibility that you're not just saying you're going to do this, is you have an actual plan, you're transparent about what those things that trigger different behaviors. Because let's face it, what we're actually doing here requires a lot of effort. It is not doing what we used to do and just doing it a little bit better or with ESG tacked onto it. And that's a really big thing to do in organizations.
Yeah, I agree with Joy on this. I actually believe that getting this to be BAU within AXA is my goal. I want it to be part of the businesses, and AXA was already a member of the Net Zero Asset Owner Alliance and the Net Zero Asset Managers Initiative, and then of course instrumental in starting the Net Zero Insurance Alliance. And there was, of course, this feeling that we should have all of the balance sheet represented in terms of our goals, and that gets to the transition plan of the whole company. And really the work that we're trying to establish on the underwriting side is to have these conversations and these initiatives and the work that we'll be doing be the BAU for our underwriting teams as part of their strategies going forward. So I kind of take the BAU comment and say, that's exactly what I'm striving for. I want this to be just a part of the normal business operations for the underwriting activities.
That's a really interesting point. It's been fascinating to watch our relationship managers, the people out there across the economy right now, talking to clients, and now engaging in transition strategy conversations, which many of them wouldn't even know what that meant 36 months ago. And now they're going and sitting down with the treasurer of ordinary company out there in the economy somewhere, saying, let's talk about your balance sheet needs. And let's talk about your transition strategy. And I had a light bulb moment with the CEO of a European bank who said, this has been the greatest gift to bankers in my career. And he's been at this for 40 years. He goes, I'm now having strategic conversations with my clients that is helping me see not just about their climate strategy. It tells me about their strategic thinking. And those who do have a transition strategy, especially a well-baked one, that means they have a strategy. And they're thinking strategically about where the organization should be in 2030 and beyond. We want to bank those kind of clients. Those are good long-term relationships. Those who haven't even lifted a pencil on it, yeah, you may keep them as a client, but it's kind of like a little note to self. If they're not thinking about planet Earth and about their business in 2030, as their banker, maybe we should be kind of having a discussion amongst ourselves and eventually with them about how are you getting with the program and even leading the program. So exactly, BAU actually can be a real strength. Just quickly to add to that though, transparency and accountability, which is what GFANZ and the EDS-MBA is about. We've touched on that a couple of times. That's what we've signed up for. And we know that we will be held to account for this. That's one of our core pillars in RBC's climate strategy, is hold ourselves and be held to account. That's a real important declaration from a regulated financial institution, taken very seriously. This is something our board of directors talks about pretty much in every board cycle, that the CEO and the executive team talks about very regularly for a whole host of reasons, but the accountability is one of them.
I love the penultimate point you made there. I've really felt for a long time that, that the quality of an institution's climate strategy and how holistic and embedded that is, I really see that as a kind of proxy for being able to evaluate the quality of management in an institution, because if they're not paying attention to this, they've really got their eye off the ball. We've only got a very short amount of time left, so if I could just ask all of you just to come back to the topic of this session, which is the next steps for net zero, just 20 seconds each on, what are your next steps on the net zero journey this year?
Sure, I could start. And it's really simple. Like, we want to see those transition plans. And in fact, if anyone is planning to do transition plans this year, I would love to hear about it. Please contact me after the panel.
Okay, Joy, I will. So for the Net Zero Insurance Alliance, we do have lofty goals. We will be having our members announce and publish their first set of targets in July of this year for the first round, and the second round coming next year. We are on a campaign to increase membership, so if any insurers or reinsurers out there are interested in knowing more about the Alliance, give me a call, contact me. We're also looking to expand the ecosystem, because the insurance industry is an ecosystem that includes more than insurers and reinsurers. There are service providers within that, and we already have a statement of commitments that have been written for brokers. So we don't have any brokers that have joined the Alliance yet, but we're going to have an active movement to try and get our broking community to be involved, because they're important in the ecosystem as well. So that's a bit about what's happening.
So just very quickly, data and methodologies, continuing to work day and night on those and improving those. Can't underscore that enough. That's going to be a big chunk of what we're doing through this year. Secondly, continuing to ensure Canadian policies and practices align with North American and global policies and practices, because we don't want gaps to grow there. Good work being done there, but that is an ongoing challenge. And then thirdly, on pathways, working not just internally, but working with client groups, with sector groups, and with governments to ensure that there are clear paths on a host of sectors towards net zero. We formed an alliance with the agri-food sector as an example, and working with leading actors, players in that sector on their transition pathways, and then starting to, then we'll get to be able to reflect that in our own strategy and disclosures.
Brilliant. Well, everybody, please join me in thanking John, Sherry, and Joy in being willing to share all of your amazing insights. Thank you so much.